From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 27, 2018. Today we're taking a look at the NZDUSD New Zealand dollar versus the US dollar for today's trade analysis. Of course, this currency pair has been in a downtrend for quite some time, going all the way back into April of this year, where we capped out at the top of the black trend line, close to the 7,400 level, all the way at the top of the chart. And then we started moving lower, first leg pressuring down into the 6,850 or so level. A little bit of a rally back into 7,050, and then the second leg pushing all the way down to the low on the chart into the upper 6,600. Since then, we've been somewhat of a range or consolidation here for the NZDUSD, right inside this black box bottom right hand corner of the chart. Pink zone as our support, green zone as the resistance, and the blue zone somewhat as a hinge point, above it heading to the green zone, below it heading to the pink zone. So let's go ahead and concentrate on this area here. Let's zoom it in, and we can see the green zone as resistance over the past couple of days. Even we've seen the market challenge in between 68.30, 68.50, and now selling off and falling back underneath the blue zone. Previous times we've done that, we could see over here the first time getting underneath the green zone, back under the blue zone, heading down to the pink zone. Take a look at that. That's very significant here for this pair right now, is that underneath, every time it was above the blue zone, getting back underneath the blue zone, it head to the pink zone. So that's critical for today. We see it above the blue zone, at the green zone, back under the blue zone. So historically speaking, the statistical fact is, once it does that, there's this expectation that it will continue to head back down towards the pink shaded area into the 67.45.25 level. With that expectation, we could be looking for shorts underneath the blue zone, targeting the pink zone. Of course, if it can ever continue the trend and continue to break underneath the pink zone, we'll look for it to go lower. But for right now, the easiest setup here is under the blue zone, we head back down to the pink zone. The risk is pretty simple. The risk in this scenario is we just don't want it to get back above the blue zone. If it gets back above 6,800 in the blue zone, it will likely go back to the green zone. So for the day today, it's pretty easy to figure out that if you are looking to trade this, you don't want to buy it under the blue zone. Likely resistance, as we've seen historically underneath the blue zone. But more likely, you're looking for a setup to go short towards the pink shaded area. And the only reason you would buy this is that it was at the pink zone or above the blue zone. Let's take it on down to the 4-hour time frame. Doesn't really change it, but it gives us a little bit of a different perspective here. You can see historically, again, multiple times. I'm just going to take a couple of black X's here. You can see under, right here with the black X's, under the blue zone, went to the pink zone. Far left hand side of the chart, under the blue zone, went to the pink zone. I could put multiple X's on here many times, finding resistance into the blue zone when it was underneath it, and the only reason it went higher is it got back above the blue zone. So today, again, we are underneath the blue zone. 67.80, 6,800 is that blue zone. And so for the day today, as long as it's underneath there, we have this opportunity for it to go back down to the pink zone or lower if it breaks through that pink zone. And of course, if it breaks through, historically speaking, there's potential for it to go down to the yellow shaded area down at the bottom of the chart. And I'll bring that over a little bit as well. So when do we sell it? That's probably the first question. Well, to have the lowest degree of risk, we want to sell close as possible to resistance. Stop loss is going to be above the blue zone. So if we were to sell it now, our stop loss is higher. Let's just measure it from current market price. Up here, you know, you're looking close to 50 pips if we suppose the stop loss is right about right there. The other side of that is if it comes back up, if it makes a little bit of a rally from current market back to the blue zone, then we've cut our risk a little bit. If we were to sell it at the blue zone, you're now cutting your risk about 20 pips. Then of course your potential reward at that point is much greater as it falls back down to the pink zone. So if I'm looking to go short, I actually want to do it as close as possible to 67.80. Give me a better risk reward profile for going short. Now, the other side of that, again, is that it breaks above the blue zone. That's the risk in this scenario. So I'm looking to go short under the blue zone, target the pink zone or lower for the NZDUSD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.